Dearly beloved, we are gathered here today to talk about just what it's going to take for some buyers to achieve the dream of home ownership in today's challenging real estate environment. And maybe we're even going to help a few of them find the perfect loan and party like it's 2021. If you don't plan to let the mortgage rate elevator bring you down, let's go crazy and learn how to rock temporary interest rate buydowns starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. Let's face it, in a rising or higher interest rate environment, home buyers look to find any number of ways to reduce their rate and their payment. And I've covered some of the more common and accessible ones in previous videos, which you can find at the link above. But one option that falls in and out of favor as interest rates move is what's known as the temporary interest rate buydown, which might also be considered a graduated interest rate loan program. So how does this buydown thing work? Well, let's look at one of the more common options, what's known as the 2-to-1 buydown. The buyer here would be getting a 30-year fixed rate loan, so that doesn't deviate from most other scenarios. But with a temporary 2-to-1 buydown, in the first year of ownership, this buyer's rate would be discounted 2% off of the actual rate. Then in the second year, the interest rate would be discounted 1% off of the actual rate. Years 3 through 30 would be at the actual and permanent rate. You might ask, why is this helpful if the rate eventually goes up anyway? Simply, it allows the new buyer to ease into their mortgage payment. And the reductions over the first years can be helpful in allowing the buyers to both establish a household budget in a higher rate environment and perhaps also benefit from an increase in wages and income over the initial period. So by the time the new owners are making their actual payment and paying the full rate, they may be doing so with incrementally higher take-home pay. All right, you say, you see the benefit now, but what's the catch? Why doesn't everyone use this option if it's so beneficial? As you might have suspected, there's a cost for this program, and it needs to be paid up front, or I should say, when the transaction closes. And while the costs vary depending on the buydown type and other factors, and we can provide specifics on this at any time, usually the buyer and his or her realtor need to propose the buydown to the seller or the builder at the time of their initial offer. In other words, they negotiate both the price of the home and the credit to cover the cost of the buydown when they submit an offer to buy the home. Realize that even though there is a cost to the seller when financing a buydown, the seller may still be very motivated to pay it. Especially a situation where another buyer who may not be using a buydown may be pressing them for an even larger price reduction on the same home. Buyers using a temporary interest rate buydown have another negotiating tool to exploit. And in a buyer's market, this shifts from being a disadvantage to an advantage. If you've been thinking about buying a home for some time, but rising interest rates have prevented you from doing so, get in touch if you have any questions about a temporary interest rate buydown. Whether it's a 3-2-1 buydown, a 2-to-1 buydown, a 1.5-to-1 buydown, or any other variation. And the same holds true for any other aspect of the mortgage process that will get you the financing you need. Simply get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below, and we'll keep the hits coming.